大家好，今天我们分享一下美国财政部长贝森特昨天的一个访谈。主持人也有套他的话，问美联储主席和财政部长干哪个更重要，但是他的回答四平八稳。他说两个工作都很重要，具体要听川普总统的安排。原话是 I will do what the president wants。 这里是大脑透镜，我们致力于过滤信息海洋中的垃圾，为您挖掘优质内容，记得订阅常来。主持人问到赤字和债务问题，贝森特表示他们接手的是烂摊子，拜登时已经把赤字搞到了很高的比例，占 GDP 的 6.7%， 这个数字是非衰退或非战争时期的最高水平。他说放松管制和税收政策会提高生产率和资本税后回报，预计经济增长将超过赤字增长，解决财政问题。关税收入预计在10年内达到 2.8 万亿美元，也将大大缓解赤字压力。他说美元近期的下跌属于正常的货币波动范围，部分的下跌归因于欧元走强。关于与中国的贸易谈判，他表示将在未来几周内与中国官员见面，讨论贸易及可能的合作。主持人问到 TikTok 的问题，但是贝森特表示这不在他的职责范围内。关于他担任美联储主席的传言，大脑透镜认为这种概率并不低哦，大家怎么看？接下来是访谈的完整版，如果我们的内容对您有帮助，请帮忙订阅、点赞、转发，我们会持续为您挖掘优质内容。
And join us now for the latest on tariffs and the recently passed budget bill and more. Treasury Secretary Scott Bessent. Mr. Secretary, thanks for joining us. I don't know how much you could necessarily hear of our last conversation. We definitely want to talk trade, tariffs, and all of the above, but let's keep the discussion going about the big, beautiful bill, deficit concerns, debt concerns. You have made the argument in the past that this will address the deficit, and you see deficits in future years coming down from whatever it is, 6% of GDP. How do you argue that that's going to happen? Tell us again.
Well, good morning, Joe. And look, we inherited a mess, and I'm not sure where all these deficit hawks were when the Team Biden was blowing out the deficit. So last year was 6.7% of GDP, which was the highest it had been when we weren't in a recession, weren't at war. And as your previous guest said, we don't have a tax collection problem. We have a spending problem, and we are trying to get that under control. We are also trying to accelerate growth because changing the growth trajectory upward solves a lot of the deficit problems.
Mr. Secretary, I asked the question that not all deficit spending is equal. I don't think. And would you argue that if a deficit resulted from lower tax rates or from extending the tax cuts, whatever you want to call it, if it can cause some growth, is that superior to the deficit, or is it less deleterious than the deficit you get just from Green New Deals or IRAs or whatever you're talking about, the government, just transfer payments and the like?
Well, Joe, you're exactly right. Does the spending create more growth, and is the GDP growing faster than the deficit? One of the things that I agreed with Secretary Yellen on, the important number is the debt to GDP, and we intend to bring that down. We also intend we cut spending on the IRA. There's substantial pullbacks. A lot of those were uneconomical, stranded assets, and the Trump economic agenda, as I've said many times, it's a three-legged stool. It's trade, it's tax, and it's deregulation. So, I also believe that the substantial amount of deregulation that we're doing is going to accelerate economic growth. And the important thing, too, is we're going to have economic growth in a non-inflationary manner, unlike we saw in the previous 4 years.
Okay, let's move on to trade, and it's amazing how quickly things move. I know yesterday you said by Wednesday we might have a couple of more deals to announce. I know it's Monday, it's not even 9 o'clock yet. Can you give us any idea whether that's likely? Is India, is that in the mix? Can you break any news for us here that something's going to happen in the next 48 hours?
Yeah, we are going to have several announcements in the next 48 hours. And, Joe, I think what President Trump is concerned about is the quality of the deals, not the quantity. As you could imagine, as he started herding the cats and trying to get everyone across the finish line, when he said that there's a chance that countries could boomerang back to their April 2nd reciprocal tariff levels, we've had a lot of people change their tune in terms of negotiations. So my mailbox was full last night with a lot of new offers, a lot of new proposals. So it's going to be a busy couple of days. But importantly, too, that President Trump has said that the countries would not go back to the reciprocal rate until August 1st.
Mr. Secretary, question on behalf of a number of viewers who are in business importing things from Vietnam, and they want to know the following. They say this 20%, is that on top of existing duties? Is it 20% overall? What is the actual number? Because I think there's a lot of folks who are still confused or trying to do some planning here.
Andrew, 20% overall.
20% overall. So there's nothing that's not tacked on to something else before that.
No, this supersedes all the other tariffs. Now, there may still be some of the 232 tariffs for specific industries, but in terms of generalized, it's 20%.
Mr. Secretary, I think you took, or at least it was interpreted, it was a softer tone on what's going to be included in the letters that go out on Wednesday. What can we expect? What are they? Is it ultimatums and the president's way or the highway with some of these numbers, or are there details on I don't know, sort of staking out positions and letting these countries know what where they have more work to do?
No, they're pretty standard letters, Joe. It's just thank you for wanting to trade with the United States of America. We welcome you as a trading partner, and here's the rate, unless you want to come back and try to negotiate.
The one thing I've noticed that a lot of people that don't want any tariffs and are the most critical of the entire approach to trade are the ones that seem most disappointed when the president doesn't follow through on the tariffs that he's promised. So when it appears that he's trying to do deals and trying to, negotiate from a position of strength, they're the first ones to criticize him for not following through with the really draconian tariffs that we all hope doesn't come to pass.
Well, Joe, as I've said over the past few weeks, TDS, which used to mean Trump derangement syndrome, has turned into tariff derangement syndrome. And this same group was pulling for the economy to slow, for inflation to pop up. None of that has happened. None of that has happened. And as a matter of fact, we're taking in substantial tariff income, which I don't like the CBO scoring, but some Democrat made the mistake of asking the CBO to score tariff. And over the 10-year window, that's $2.8 trillion based on the current deals. And I can tell you that the deals that are coming out will be slightly higher than that. So again, I don't like CBO scoring, but $2.83 trillion over the 10-year window substantially eases the deficit.
Mr. Secretary, you are an incredibly busy man. I think your portfolio is more expansive than any Treasury Secretary I recall ever seeing. I just wonder, what job do you think is more important to the markets, to the economy? Would it be Treasury Secretary or Chairman of the Federal Reserve?
Look, they're both very important jobs. I am busy as Treasury Secretary. Becky, I think you're asking which is more important for me to do?
I am.
Okay. Look, I will do what the president wants, but I think that we are making great gains here at Treasury. We've had a busy 5-6 months out of the blocks, and we've got a lot to do. Passing the one big beautiful bill on July 4th was an incredible achievement by the president, by Speaker Johnson, by Leader Thune, but now Treasury is tasked with the implementation.
Mr. Secretary, as you think about interest rates, we've heard from the president talking about what he would describe as too late Powell. Powell is not going to be in this job in a year from now, no matter what. And one of the conversations we had with Steve Leisman last week was the idea that maybe the market has already built in almost the shadow Fed idea that you raised about a year ago before the election in terms of how the market thinks. Do you think that interest rates, to the extent they have been kept down, irrespective of what the Fed is doing, or at least the expectations of what the market thinks, is a function of that?
Well, Andrew, you know, I always say markets live in the future, and I think markets may be pricing in that perhaps the president's right, that rates should be lower. I would say that the market's pricing in lower, I think it's 2 cuts for the rest of the year, and then the 2-year, the overnight and the 2-year are inverted. So maybe the market's just pricing in the economic fundamentals. And sure, is a different Fed chair is a kind of forward guidance. But as I reiterate to people all the time, it's not just the Fed chair, it's a committee.
By the way, what are your lunches like with Jay Powell these days?
Well, it's breakfast, and we have a lively exchange. We do a home game and away game. He comes to Treasury, I go to the Fed. The Fed's food is much better, so I enjoy breakfast over there. And we have very lively and far-reaching discussions with a lot of mutual respect.
They can spend as much money as they want on breakfast at the Fed. They're printing. It's like anything goes. It's like,
They're not worried about egg prices over there.
Are people actually leaving tariff offers for you on your voicemail? Or was that?
They're coming in a lot of different ways, Becky.
That's curious.
Yeah. You're at this point, you're still Treasury Secretary, so I need to ask you about the dollar. And it actually is a sort of an issue that, the markets are at new highs, equity markets, the bond market has been behaved after the big, beautiful bill. But people looking to nitpick or looking for something to really be concerned about, talk about the dollar's behavior since the beginning of the year. I think it's the worst start of a year in 30, 40, 50 years. Was it overvalued, Mr. Secretary? Was this long due? And given the recalibration in global trade the president's trying to effect, is this to be expected and actually welcomed?
Well, Joe, I was in the investment business 30, 40 years, and more than half my gains came from currencies. So I think I have a good box to stand on here when I talk about currencies. And I can tell you that it's natural for currencies to go up and down. And what we've seen is not out of the ordinary, maybe the speed with which it happened. But again, these days things seem to happen much faster. After the bottom in the stock markets on April 9th, we had the fastest recovery from a 15% drawdown in history. And I would point to President Trump's first term. Over the first year, the dollar went down about 7% when Tax Cuts and Jobs Act were passed in December. Then over the ensuing few years, the dollar went up. And the value of the dollar, it could mean that other countries' currencies are strengthening. The index that you're referring to is the DXY. The largest component of that is the euro. And one would expect that the euro would appreciate given the fiscal spend that we are seeing coming out of Europe, especially on defense and especially from Germany. The other thing that's happened, we have seen a substantial depreciation in the Chinese currency, the RMB versus the euro. So I believe that's down about 11.5% on the year, and it's just hit an all-time low. So, I don't see people waving their hands in the air about the Chinese currency depreciating.
Mr. Secretary, I wanted to ask you about China. About a week ago, President Trump referred to a potential deal over TikTok in the next 2 weeks. Some people looked at that and said That's an interesting chess piece as part of the larger negotiation with China. What is the timeline at this point with China? Can you give us any sort of sense of how things are going there?
Andrew, one of the things that's not my portfolio is TikTok, so I can't speak to that directly. What I can speak to is I'm going to be meeting with my Chinese counterpart sometime in the next couple of weeks. We had good meetings in Geneva, in London. We both approached it with great respect to the two largest economies. And I think there are things for us to do together if the Chinese want to do it. So, we will discuss whether we are able to move beyond trade into other areas.
Secretary, I know you have to leave. I was kind of clumsy in asking my question about just trying to talk about different types of deficits. Judy Shelton, I don't know what happens with the Fed. I don't know who's there in a year, but this is pretty eloquent. She sent this in. This has been one of her Wall Street Journal pieces. There is a difference between government overspending, which borrows from the future to pay for current consumption, and tax-cutting incentives now to spur more production down the road. Government borrowing to finance socialist redistribution isn't the same as government borrowing to invest in entrepreneurial capitalism. That's pretty well said. I might tweet that out. You're free to tweet that out if you want to.
Okay, Joe, the other thing, too, is that I think in the Tax Cuts and Jobs Act, which was made permanent, is the 100% expensing of
that's not talked about much.
Which is very powerful. We also have a 5-year window for 100% expensing for factory structures and agriculture structures. So, to take a tax hit on that is really, you're really winding the spring, and you are creating high after-tax returns on capital, which increase productivity, which is what makes countries rich.
Very good. Let us know. We're here if you want to get it out. I think we count as disclosure, don't we? We count as fair disclosure. If you're leaving now and you get something in your email box or something, just call us back. Will you do that, Mr. Secretary? Let us know.
After
Maybe
the
not.
president, Joe, you'll be my second call.
Right. There you go.
That's not bad. Thank you, Secretary Bessent. Appreciate it.
Okay. Thank you all.